Hello, everyone. Good afternoon, and thank you for joining the Business Affairs webinar, Profitable or Just Busy. I know you all will have busy schedules, but to be in this session means you want to know if you're actually just being busy, moving money in your business, or your business is actually profitable. So kudos founders for joining, and we'll hop right into the session. I'm going to be presenting right now, so I'll kindly want you all to confirm if you can see my presentation. Thank you. Please confirm if you can see my screen. You can just send a reaction so that we get started. Thank you. Thank you. Thank you. So is your business making money or just moving it? It's a very important session we decided to host in Business Affairs because of the realities we've been dealing with. So we'll hop right in. Beyond the sales line, revenue versus profitability, they are two separate sides of the coin, and that's part of the things we are going to be learning today. And these key metrics define your business health. As a business owner, you need to know how much it takes you to acquire one customer and the entire lifetime value of acquiring that customer. We'll get to talk about this as we proceed. So let's talk about Business Affairs before we get into the session proper. Business Affairs is a technology platform that helps founders, business owners, entrepreneurs through every single stage in their business life cycle, from the very beginning, which is your business formation, your entity formation, up until every single process you do in your business, from your compliance to your accounting to your tax to your HRO, and we offer business advisory services. And we'll meet the presenter of today's webinar. My name is Zulfa Isimikai. I'm a chartered accountant, and I have over 10 years of experience working with business owners. My mission is to empower business owners to gain clarity on their financial performance so that their business can be sustainable, not just sustainable, and scalable. Now, what you'll learn today, you will learn the financial fundamentals. You will be able at the end of the day to distinguish between revenue, profit, and cash flow. Your operational health, you'll be able to identify your financial leaks in your business and know how to close those leaks. And you have essential metrics every founder must know. And all this ensures your decision making is strategic. So you learn how to leverage financial data to drive growth and operational efficiency in your business. Now, let's quickly do a financial reality check before we move in. We have 4 levels here, and I want you all to identify what level you are in your business. You can just drop a comment in the comment section and we'll know. We have level 1, the novice. I understand the basics, but struggle with complex statements. And what do we mean by complex statements? You understand little things, money coming in, money going out, but you don't even understand anything your statements, your records at the end of the day is telling you. So you are just moving money in and out of your business. And then we have those that are the intermediate level. I manage daily cash flow and basic reporting comfortably. Oh, yeah, I understand what it is for money to come in and out, and I can actually do some recordings that make sense to me in my business. And we have the proficient ones that say, oh, yeah, I can do a lot of things up to the extent of making strategic decisions. And then we have the ones that are experts that say they have a deep knowledge, deep dive into every single thing that has to do with their numbers in their business. So I want you to just take a moment to analyze of these 4 stages, do a reality check. It's going to make you open-minded to understand this session as we proceed. Do a reality check and let us know which of these levels you are currently in your business. Excuse me. Now we move on, and the biggest financial mistakes we have seen is that the revenue trap. Business owners solely focusing on generating revenue. But it's one thing to generate revenue, and it's another thing to actually be profitable. So in summary, we'll say that revenue does not equal profits in any way. Now we look at the margin reality. Increased volumes bring increased complexities, higher operational overhead, and rising customer acquisition cost. The more you increase your services, your goods, your acquisition costs will increase because you need to get more people to purchase your items. And quality over quantity. Not all revenue is created equal. You have low margin sales that can actually erode profitability. And strategic shifts move from a growth at all cost mindset to one focused on unit economics and bottom line contributions. So profitability is a function of disciplined cost management and pricing power, not just transaction volume. It's not enough to say I'm selling 1,000 items. The 1,000 items, how much are you making from it? Are you just collecting money and at the end of the day, there's no profit? These are the key things that are important to know. Now, let's start by defining revenue. What actually is revenue? Revenue is the total amount of money that your business generates. Are you a service provider? Are you do you sell items? Do you sell goods? Do you sell confectionaries? Do you sell bags? Do you sell shoes? Do you offer consulting services? Do you offer digital marketing services? All these, the money you get that comes in is what we call revenue. Oh, I charge 200,000 naira for this. My bag costs 50,000 naira. If you sell that bag, what enters your bank account is 50,000 naira, and that is the revenue you have received. Now we have this table you will be seeing here shows you a combination, the ones that offer services and the ones that offer products. But it's just to give you a general idea. If you're making 1.5 million naira from your sales and 500,000 naira from your products, your total revenue is 2 million naira, right? Now, that is on one hand, that is revenue defined. And we need to now understand the next key thing, expenses. Because once the money comes in, it doesn't just sit in your bank account. There are many things you need to do as a business owner. For example, do you have employees? Do you have a shop? Do you have a business place? Are you marketing? Oh, we're marketing on Instagram, we're marketing on Facebook, we're marketing on TikTok. It's money that is being spent. Are you accounting for it? Those of us that use software, maybe we want to generate invoices, we want anything we want to do, even the software we're using to design, I do my designs myself. Are you paying, for example, Canva, 10,000 naira monthly? That is already an expense. Your logistics, everything it takes to even start, to even have that good, the product, whatever it takes, these are things, your shipping, the supply chain management. So people are bringing things from China these days. Are you accounting for those costs, those logistics costs? And then utilities. This is a very tricky one that we've seen so many business owners lose track of. You just see, oh, I bought electricity 10,000 naira, you forget about it, you don't record it. Oh, we needed tissue paper, we bought tissue paper, you forget about it, you don't record it. These little expenses are bringing leaks into your business that you may not even identify. So say you have 500,000 naira in your account, before you know, you're left with 0 naira, right? And you have 0 bank account balance. It's not just about having 0 bank account balance. The main thing we want to discuss is the 500,000 naira that you collected. At the end of the day, were you able to say, I was able to realize 200,000 naira profits by making 500,000 naira revenue, 100,000 naira profit, 50,000 naira profit? These are the key things we are talking about. That brings us to what is profit. Profit represents the financial gain realized when the amount of revenue gained from a business activity exceeds its expenses, its costs, its taxes, and every other thing needed to sustain that your business activity. So bottom line, revenue minus expenses gives you your profits. We just did a little breakdown here. Revenue, total income generated from sales or services, your expenses, and then your profit. That's your bottom line at the end of the day after all deductions have been made. So this is just a typical example to just see this business actually received a total revenue of 2 million naira, total expenses of 1.6. At the end of the day, the business was left with a net profit of 400,000 naira. This is after accounting for every single thing without any leak in the business. Now look at a case study. We have two different businesses. We said business A, volume-driven revenue. Volume-driven revenue. If you recall what I said earlier, I said it's not just about the volume, it's about the quality, right? So we're talking about two different businesses here. Business A was so focused on getting more people to buy. But at what price? The business was able to get a revenue of 1 million naira. After all expenses was deducted, the business made a net profit of 50,000 naira. Now we have another business that was margin-focused revenue. The business focused on its price margins. It's not just about getting people to buy. But is this business sustainable? Next month, 2 months' time, if this same customer becomes a recurring customer and comes, will I still be in business? That's what business B focused on. And business B was able to realize a net profit of 150,000 naira. We looked at quality versus quantity. Now, there's a tagline I really like to use. Revenue is vanity. It's just flashes. Oh, we have 2 million naira, we generated 2 million naira. Yes. Profit is sanity. Profit is what actually makes you know your business is on the right track. High sales volume is meaningless if your cost of goods sold and operational expenses erode your bottom line, which is your profits. Now, let's look at the missing piece. This is where it really gets interesting because most business owners miss this. Cash flow. Cash flow. This may be a little bit complicated for some of us, but I'm going to break it down to the best of my ability to ensure everyone understands it. In simple terms, what is cash flow? Cash flow is cash in, cash out. It is the actual movement of money in and out of your business over a given period of time. It's distinct of your profits. You made 200,000 naira profits. That's good. That's fine. But the money in and out of your business, in and out of your accounts is what is cash flow. For example, you have 2 million naira today. Tomorrow, you have 0 naira. You are not liquid. You're not a liquid business. You don't have cash flow. So we have accrual versus cash basis. It's an accounting term we use in accounting. Accrual basis is income, and income is earned when a customer actually shows interest in purchasing an item, not that the customer has paid for the item. And then cash is only when you've received cash, you say you have earned income. So that's why it says profits records revenue when billed, while cash flow tracks when money is received into the bank. Accrual, when you bill the client, oh, you already know you're expecting 200,000 naira, for example, but it has not come into your bank account. The cash basis, which is actually your cash flow, shows 200,000 naira has actually come into your bank account. Then we look at the timing gap. You know, what timing gap means is for some businesses that have payable period, you tell your customer will purchase something from you, and then you say, oh, you pay in 30 days time, you pay in 60 days time. but you have enough customers to cover that timing gap. For example, a customer purchases an item worth 500,000 naira today and it's payable in 30 days. Can you survive in that time gap in 30 days, waiting for that your customer to pay, hoping the customer doesn't default on that payment date, right? Operational expenses often require payments before the customer invoices are collected. Now we look at non-cash expenses. This is also an accounting term. Items like depreciation, amortization, they reduce net profits, but they don't affect your cash reserves. For example, you have a car for your business. In accounting, we depreciate the car over its useful life. If we say this car is useful for 10 years, there's a depreciation that applies per year to the car, depending on the value. Now, it's a non-cash expense. It does not reduce your cash in your bank, but it reduces your net profit on the surface value. And then we look at working capital needs. Business growth necessitates upfront spending on inventory. You need to spend money. Most times, if you want to go and purchase bulk, people are purchasing things. Let's use this viral trend of going to China and purchasing things. You can't leave Nigeria and go to China and have a deal with the Chinese man and tell the Chinese man you pay in 30 days. You're expecting money from your customer. He won't give it to you. So you are going to China with money to purchase those items. That's why I say business growth necessitates upfront spending on inventory and human capital. Human capital is as much as the cleaner that comes to clean your shop, as much as the security man that is at, those are human capital you require for your business prior to when your business becomes profitable. So this is just a brief graph to understand the cash flow better, where you have the stage one, your value is created with the customer, you invoice the customer, and then you have your business policy of 15 days, 30 days, and then when you finally receive your cash. Now we look at profit but no cash scenario. That's the accrual versus cash accounting that I've already explained, which is what I've explained in detail. Profitability metrics may indicate a healthy business, while the cash flow statement reveals underlying operational risk and potential insolvency. It's your cash flow statement that actually shows what your operational structure is. Do you have funds at the end of the day, or are you going to declare insolvency in the next 1 year, in the next 2 years? This long-term projection is really important in your business. It's not just about selling. You sell today, you are happy you've made sales, but what do you have at the end of the day? Now, let's just take a brief. We've talked about revenue, we've talked about profits, we've talked about cash flow. So this is bringing everything together in one snapshot to give us a better understanding. We say revenue, total income from sales. The key focus is top line growth. Oh, the company made 100 million naira in revenue, but we've not gotten to, was the company profitable at the end of the year? Why it matters? It indicates market demand and scale. Oh, to make 100 million naira, it means people actually want our service, they want our products. And then we have profits, revenue minus all your expenses, as I had explained earlier. Efficiency is the focus, viability is the business viable at the end of the day, and it measures your operational success. Cash flow, that's where most business owners miss it, like I say, and that's one of the most important things you should know as a founder in your business. In fact, if at the end of the day you don't take anything from this session, I want you to keep on ringing in your head cash flow, actual movement of cash, your liquidity, your timing, when you get to receive your payment, you receive your payments immediately. There are some businesses that have a policy of no pay, no delivery of item because they are trying to protect their cash flow. If they sell that item, they need to repurchase the item and they don't want to be left stranded. Some others may say, oh, we have enough cash so we can get more customers, so we give them a time period to pay, and it determines the ability to cover your immediate obligations. Why businesses run out of cash? Extremely important, and one of the things I love so much. Over expansion risk. You've not seen the level your business is on. Oh, you want to open a second branch. is your business ready to open that second branch? Or, oh, you want to add an additional service to your business? Or, oh, we already have two products we are selling, we want to add a third product. Excuse me, I'll just take a sip of water. Thank you. So over expansion risk, like I was saying, you want to scale faster than your business. Late payment impacts, like we've already said, the time gap you give your customers to pay you, and at the end of the day, they may not even keep to that timeline, still withholding your money. You have to be chasing your money. It affects your cash flow. High overhead burden. Most businesses may not realize they have a high overhead because they're not even tracking their expenses. They're not tracking things. So they won't realize they have a high overhead until it gets too late. When your overhead is high, it means you are spending more than you are getting. When it's extremely high, you are spending more than you are getting, and you keep on running out of cash. Aggressive growth strategies often outpace current revenue, leading to the depletion of capital reserves during scaling phases. So you should be ready to scale before you scale. You should have a roadmap for scaling. There are key metrics to look out for before you scale so that you don't run out of cash. And now we look at the financial leaks. Where is money actually going to in your business? Unseen expenditures. You are uncovering recurring costs that bypass standard approval workflows. For example, you want to purchase something, you don't have a requisition sheet, you just go and buy it randomly. Even if they give you a receipt, you don't even keep the receipts. Let's assume you are not writing it down. At least get a bag, a file, an envelope, something. Keep those receipts so that when the need arises, you're able to sit down and say, oh, how have I been keeping my receipts? I've not just been recording. And that's where in business affairs we can now help you. Oh, great. Bring those receipts. Let's extract the information, and then we'll be able to give you a better understanding of what's going on in your business. Process inefficiencies. Identifying manual bottlenecks that inflate operational overhead. Very important. Vendor and contract overruns. I've said this over and over again. Spotting your service fees and subscription costs that exceed the original agreements. For example, you were paying for Canva subscription for 10,000 naira, and something happens, your Canva subscription increases to 15,000 naira. Just like that, you move on with it. You start paying the 15,000 naira without actually analyzing the cost implication on your business. So these things are little financial leaks that compound over time and affect your cash flow. Revenue leakage, pinpointing missed billing opportunities or uncollected service fees. So this one is just bringing it out again, your hidden costs, your track service fee, recurring charges, redundant tools, bad debts. That's when you don't collect your money at the end of the day. Some of us incur bad debts. The customer was supposed to pay in 30 days time, before you know it's 90 days, before you know police case will enter, and so many things. Some businesses just write it off as bad debts because the money they get to spend in trying to recover their money that the client hasn't paid becomes excess than what is even being owed. So let's look at the founder financial dashboard. As a founder, you need to be able to tell what your revenue is, what your gross profit is, what your net profit is, your cash balance at the end of the day, what do you have? And then monthly, you say, oh, I spend 100,000 naira. The 100,000 naira, is it recurring monthly? Does it go higher? Does it go lower? Or is it an average monthly recurring expense? Now, this is just trying to give us another view of what every founder should know. We call it the modern founder dashboard, because now we're telling you, as a founder, you should know what your MRR is. You may have been seeing it. We talk about it a lot. What's your MRR? How much do you make every month? On a monthly basis, could you say, oh, my MRR is 100,000 naira? That's the average. It doesn't mean that next month you may not make 200,000 naira. The other month it may be lower, it may be 80,000 naira. But when you do an average, you say, as bad as it is, I don't earn more than 100,000 naira, 1 million naira every month. And then your customer acquisition costs. you are advertising on Meta ads, how much does it take you to acquire one customer that purchases your service or your product? Meta has made it easy for you. They put it all there, so you can grab it from there and add it to your founder dashboard to know what you actually spend in acquiring your customer, your burn rate, how much are you spending monthly, your active users. Active users can be active customers, active people that are purchasing your products every month, people that are purchasing your service every month, and all of that. Now, your data, why it's very important to have your data is that it helps you for better decision making. You cannot make decisions without having your data. You will just be guessing. You'll be moving money daily and you'll be guessing, hoping things go well. And sometimes when you start guessing, oh, it's like things are moving, but there is always a roadblock somewhere. You can't pass it. And that's where you get to see that there are so many things that have leaked out of your business that you were not paying attention to. And that is why it's very important to know your numbers. Don't just move money. Now, data-driven decision making. Having your data firsthand, it helps you make informed decisions. It helps you, first of all, define your objective, identify the key financial question or business challenge. At this point, what's my business challenge? It helps you make informed decisions. How do we solve it? Collect historical data, market trends, and performance metrics. Oh, over the past 12 months, this was how things went. This is the current market trend, and this is how we can now use everything to improve our business, to make clear decisions that will be beneficial to your business. And then you'll be able to assess risk profiles. You use your decision, your data to make decisions. To say, oh, we can do this sensitivity analysis to know what our return if we make this investment in our business. For example, you produce cakes and you need a very big mixer to mix your flour, your sugar, and all that. Maybe a customized one that is big enough to handle 20 cakes at a time. You have your butter at once. How much will it take you to invest in that item? Do you have the funds? One, how much will it take you to recoup? How long will it take you to recoup that investment? That big mixer you've purchased, how long will it take you to recoup it? Are you going to have to make 500 cakes before you be able to recoup it? Or are you going to be able to make just 100 cakes before you recoup it? These are things that will help you make decisions, and then you'll be able to evaluate your alternatives, because when you sit down, you have things to actually look at and be able to make objective quantitative analysis to know what is right for your business. Before I proceed, I want to know if we're finding this session very enlightening and being impactful for your business at this point in time. So let's move to the founder decision framework. You have your profitability analysis, you have your cash flow monitoring, you have your scaling operations, and then you have your strategic prioritizations. These decision frameworks, they are very important because you need to, first of all, know your profits, know your cash flow, know if you are ready to scale, and how you make strategic priorities. There are things in business, and when I'm talking with some of my clients, I said there are things that are must-haves. There are things that are nice to have. For example, you have an office space. There are must-haves for your office space. You need a table, you need a chair, you need the least internet because you need to be on the internet and all of that. Those are must-haves. You need cleaning material because you can't come to a dirty office. Now, the nice to haves are, oh, I want my office to be so beautiful. I want to buy a flower pot. I want to buy this kind of frame to beautify my office. They are nice to haves, but they are not necessary at that point in time. They are not must-haves. If you don't have them, does not mean your business will not go forward. So you need to be able to know your priorities and put them in a hierarchy order, right? In economics, because I'm also an economist, we call it scale of preference. You know what your scale of preference is from the highest to the lowest. So I want you, we're going to have these presentation slides at the end of the session. we'll send them to you. And I want, this is your tracker. It's a 7-day action plan. I want you to take a look at what you will do. I need you to do your expense audits, right? I need you to do your margin analysis. I need you to do your cash flow reconciliation. And I need you to be able to say, these are the things I've been able to identify, and these are some of the measures I want to take to increase my cost savings, increase my revenue, which will also increase my profits at the end of the day. So you fill in this thing, oh, this is in progress. You are blocking this out from your business right now. You've discovered it was leaking money and it wasn't being impactful to your business. So I need you to sit down after this session when you receive the presentation slides to fill it in. Be real with yourself. It's your business, so you don't need to lie to yourself. Say the truth, fill it in, and it will impact you moving forward. Before we come here, I want to know if we have any questions. The floor is open for us to ask our questions. You can drop it in the comments, and then we'll take it up from there. And while we're waiting for questions to come in, we're going to drop the link to our community on WhatsApp, where we share insightful business tips, things that are happening. Our community members get them first. We have a group, a community. We'll be sharing the link now. You kindly join the group so that you don't miss anything we're offering from Business Affairs. You always be the first to know. Key decision making, financial analysis, so many things we're doing. We want you to be part of the community. And then you can also follow us on Instagram. We'll also drop the link to our Instagram profile. And then what we've decided to do as a giveaway to those that have attended is we have an ebook on setting prices, which is valued at 6,000 naira. To be able to identify most of these things and to be able to know that your pricing in the first place is even right, you need to know if you are setting your prices properly. So we wrote an ebook on setting prices because we discovered that business owners don't even know how to set prices. We have Sade is selling bag for 20,000 naira, and then BC just looks at what Sade is doing and decides to buy that bag, to sell that bag for 20,000 naira. Let's assume Sade was a more intentional business person and has calculated all her costs, and at the end of the day, Sade will be able to make a minimum of 5,000 naira on that bag. She's making 5,000 naira on every bag sale. And we have BC that has just copied Sade's pricing. Oh, this bag is the same bag now, so let's sell it for 20,000 naira at B. 20,000 naira. At the end of the day, BC sells that bag for 20,000 naira and is struggling to even make 1,000 naira because she did not factor in her expenses. How much did she actually buy the bag? How much was the logistics involved in the bag? How much did she use to market before she was able to sell one bag? All these things are things that BC did not consider. What Sade considered at the end of the day is the same bag, the same 20,000 naira, but different profits, just like we had analyzed earlier, right? So if you don't even know how to set your prices, then there will still be a major financial leak in your business. So what we'll be doing is we'll be giving the ebook, which is originally valued at 6,000 naira, we'll be giving it for free to everyone that is in this session, everyone that gets to join the compliance WhatsApp group. So when you join the group, you have access to the free version of the ebook. And we also love for you to give reviews. The idea of giving reviews is that you actually found value. You were able to actually see that there were things missing in your business that you were not actually tracking properly. You were setting prices without. So when you give a review, it shows that, oh yes, this book was impactful to you and you are serious about setting your prices well to be able to actually make profits at the end of the day. So do we have any questions so far? So if we don't have any questions so far, I'm assuming that we are good to go, and we've actually benefited from the session so far. Please give reactions. Let's know you are still with us. Let's know you can still hear us, and you're actually learning something good. Okay, you raised your hand. Would you want to? Okay, there's a question here. I want to know how often I need to file my annual filings. Okay, this is a question related to Corporate Affairs Commission. It's CAC. If you've registered your business, if your business is registered with the CAC, be it a sole proprietorship, be it a limited liability company, be it an NGO, which we call incorporated trustee, you are to file your annual returns annually with the CAC. The idea of filing your annual returns is to let CAC know you are still in business, because now compliance measures are more strict than before. A lot of things are being taken seriously. For example, it may be as you may see it as simple as I'm applying for a grant, but the grant organization decides to check so many things. They'll say, bring your CAC certificates. Number one, your business is not registered, so you cannot apply for that grant. Oh, I have a business certificate and my business is registered. Awesome. And then the grant organization checks and sees that you are inactive on CAC. Because a lot of all these organizations do due diligence. It's not just about applying for grants. It's about being qualified to receive those grants. They do a due diligence and CAC says you're inactive. It means you've not filed your annual returns for a while. And for every year you don't file your annual returns, there's a penalty attached to it. So I want to know, you can drop a reaction, a thumbs up, a thumbs down. Is your business registered currently with the CAC? Good. Aisha Shoaib says her business is registered with the CAC. Do you file your annual returns? You can also drop a thumbs up if you don't want to drop a comment. So she's not reacting at this point. I'm assuming she has not filed her annual returns. So you need to file your annual returns every year. You can send us a message, we can reach out to you, and then we'll follow up on how you can do this without so that you don't incur penalties in the future and you don't miss out on opportunities, because there are a lot of opportunities businesses are missing out from. Because okay, Alwali Asmau says registered but never filed. Registered but never filed. So this is a very serious thing. We implore you business owners, when you join the compliance group, we'll give you detail by detail on how we can proceed with that to ensure you are not found wanting at any point in time. Okay, let's see. I hope I've been able to answer that questions. You are meant to file your annual returns every year. I would like to know, what is the best way to manage irregular business income? Okay, this is a very, very good question. Now, irregular business income can be as a result of different things. Number one, your service offering. Number two, your positioning, right? Do your customers, have you been able to acquire customers? Do your customers know your service offering? Is your service offering clear? Do they know that this is what this is what I'm offering? For example, you sell bags. Oh, these are the bags available. Have you been able to get your customers, the women that like those kind of bags? Women love bags, but it's not all type of bags women love. So the kind of bags you sell, you have this target audience. How often do they buy? How often do you want to sell to them? When you have irregular business income, it means, oh, this month you have 50,000 naira in revenue. Next month you have 100,000 naira in revenue. The third month you may not even have any revenue at all. So the positioning, your business positioning, your customers always knowing that you are still in business. Your service delivery, is this something that is impactful to them at every point in time? Is this something they need? Is this something they cannot do without? There's always one thing. When you discover that in your business, when you're able to do a deep dive, we can sit with you, we can have a session with you, understand your business structure very well, and then bring out every strategy you need to know to ensure that your business income starts to grow. And over time, it's not magic. It's not you snap your finger and everything is good to go. Over time, when you stay consistent, you sell to this customer today, tomorrow the customer comes, can the customer find you? Are you the go-to person? Did the customer get a good service? Did the customer appreciate the service? Was the customer treated right? You know, all these things are things that will make your customer come back. And when your customer is happy, your customer will tell the next person. That's free acquisition costs. You've spent money to acquire this customer. The customer being happy will tell the next person, you don't spend any money to acquire that one the customer brings. Free acquisition cost. So all these things, your in-house arrangement, everything you put in place is what later cascades down into ensuring that your business income gets sustainable over time. And trust me, you also have to stay long in the game. You can't just come today and you want to outshine or remove the other people that have been there. You have to have a unique value proposition. What makes you different from the next service provider that will make these customers come back, that will make a new customer pick interest in you and patronize you. So I hope I've been able to answer that question. Do we have more questions, please? I'm excited that we've been able to impact and we're getting responses. Business owners really want to move their business forward. It's not just about starting a business. The easiest thing to do is to start a business, but can you keep the business? Can you manage the business? You have the right knowledge to manage your business, and that's where we come in business affairs. So how can business affairs help your partner in building a sustainable business? You can call us your business backdoor office, your backdoor operations office, because we handle every. Okay, there's a question. Let me see the question. Does a business that is still at drop shipping level need CAC registration? Of course, yes. Well, once you start a business, you need to be legally registered. You need to be a legal entity. You do a drop shipping business. You have customers. Let's assume, you don't have the goods yourself. You don't have a store. You can just be in your house. You post items, and then when the customer pays you, you get the items delivered to the customer. That's drop shipping in a nutshell. Your business needs to be registered. Because when your customer is paying you, are they paying you to Nana's accounts, or they are paying you to Nana's enterprise, Nana's ventures, Nana's business place? Do you understand what I'm saying? One of the key reasons why you should register your business is because you need to have a bank account. You need it builds credibility, it builds trust. If you're seeing so many things that have been trending on social media, how people are siphoning funds, how people go to people's Instagram DM and say they want to purchase something, and then you get a different account number, maybe a staff of the organization, you send the customer your own account number. But if there's a policy that says do not pay into any other bank account, this is the bank account you should pay into. Registered, duly registered with the CAC. It's only when you register with the CAC you can open a bank account, because the bank will request for your corporate affairs documents to show that you are legal. They can give you a bank account. So please, it's very, very important. It will ensure you keep your customers. It will ensure your customers trust you. It's one thing for them to pay into your personal account, but it is not sustainable. And that way, you won't even be able to track anything, because once money comes into your bank account, before you know, you use it to buy something personal for yourself. From that money, you still use it to buy, you have to wait for the customer again to place an order before you be able to get your items to deliver to the customer. You are not able to track anything. So you are just moving money. So please, it's very important to register your business. And that's one of the services we offer. I hope I've been able to answer that question. So we're almost rounding up, and how business affairs can help you here today. We offer formation services, which is the business registration. We start with your business registration. We know, oh, what's your business about, what's your idea about. We advise this is what you should do, this is how we should register, and then we'll go ahead to register it and provide all necessary documentations. We do your post filings, which have to do with your CAC annual returns that we're talking about here. We file your annual returns. We hold you accountable. We ensure you are compliant. Evolving regulatory standards come up. Some people also there's people confuse business registration for trademarking. They are two different things. You can have a business today registered with the CAC, and then somebody else has license to that name because the person has trademarked the name. So we also encourage businesses to trademark their name. We offer all that. And then the accounting service, which is obvious, we offer that. We help you track your expenses, track your revenue, ensure you set up the minimum accounting structure for your business that you'll be able to use to make critical decisions for your business. We offer HRFO services for businesses that are a bit have larger pool of people within them. We offer HRO services. We structure their organization for them. We make sure things are in place. You want to employ an employee, you want to get somebody on board. Have you documented that person? Is it just mouth? Is the person, come and work for me? The person has agreed to work for you. I'll be paying you 10,000 naira. The person has agreed. There is no official correspondence to show anything binding you and this person. And then tomorrow problem comes, you lose because you don't have any documentation. So these are the things we put in place in a nutshell. You can visit businessaffairs.ng to learn more, and you can chat us up on WhatsApp in the compliance group. We'll drop tips, drop so many things on how you can ensure, starting today, all the loopholes you have in your business, will begin to fix them one day at a time. Little drops of water, they say, makes the mighty ocean. Gradually, we'll do things, and then your business becomes a whole business because so many leaks have been managed, and then you're putting structure in place. Structure. That is the only way a business can remain sustainable. That is the honest truth. The long and short of this session is to tell you that you need to have your structure in place. It is the only way your business can remain sustainable. And not to be biased or shoot anybody in the foot here, most female founders that I've dealt with do not have structure for their business. So please, if you're a female in this session, I want you to please ensure you join this compliance group because it will really help you. Most women the statistics show us that a high percentage of businesses are owned by women, but the same businesses are not surviving because they are not structured, because women act on emotions. They don't sit down to structure their business. They look for, oh, let me quickly make the least 5 naira to be able to buy this thing for myself, not looking at the long-term goal of the business. So please, structure. Before the session ends, I want you to do your best to get all the links in this session so that you don't miss anything and you really start taking your business to the next level. So Business Affairs is actually located in Abuja, but we offer service because we're a technology platform from anywhere in the world. We have so many clients that have come in. They're not even in Nigeria. They've not met us for any time. We just, onboard them, and then we get their whatever their request is, we get it sorted. But our primary office is in Abuja. Our email is there, our phone number is there, our website is there, our social media handle is there. So I really hope you are ready to transform your business financial strategy. We also have a free session that may be coming up next month. As far as you're in the compliance group, you will also be one of the first people to know so that you don't miss out. We're offering a financial clarity circle. It's actually ongoing now, and we put it at a discounted price of 49,250, where if you are interested, you want to really know what's going on in your business, you come into the financial circle just for that token. And then you pick which of your months, maybe your best months from January to now, you pick the best one to know which you want to really have clarity on, and then we'll structure it out for you and tell you these are the things you need to ensure you do in your business. This was what came into your business, this was what came out from your business, this is what you should track and how you should move forward. So it's the financial clarity cycle. We do it in cycles where we open it up to business owners at a subsidized rate from our actual fees. So I want to use this opportunity to thank everyone for finding interest in this, because what you've proved one thing: you want to move your business forward. You didn't just join because you were forced to join. You joined because you saw the need to know what is actually going on in your business, not just moving money, and how you can also increase your revenue and how you can set strategic prices for your revenue. So thank you all for joining this session, and we'll continue to see you, chat with you in the compliance group, in the community. We'll share tips, share so many things, and bring so many things that were not also mentioned in this session, because it's just a 1 hour session. We can't accommodate everything to the compliance community where everybody is carried along. Any reaction? Was this an insightful session? Are we happy to join this session? You are very welcome, Mugniya Suleiman. Thank you for joining. I'm happy you all found value. Thank you all for joining. Thank you, Shizobam. Thank you, Asmao. Thank you, Nana. All of you. Thank you, Anthony. So many of you that joined. I appreciate, and we look forward to seeing you going forward. We've come to the end of this session, and I want you all to have a very awesome day. Like I said, the presentation slide will be shared with you, so no need to worry about that. You will get it all, because I really want you to feel that portion of the financial check. Thank you all so much, and have a wonderful day ahead.